Back on Morning Mover, shares of Palantir are slightly higher after William Blair upgraded the stock to market perform from underperform without a price target. Firm says that while Palantir's valuation is, quote, still frothy with potential downside risk on government contract delays, quote, there have been positive developments. William Blair adding that if the market reverts to risk on mode, the stock price may return to its prior peak. With that, time now for Options Corner. Joining us to take a deeper look at Palantir, we've got Rick Ducat, lead market technician. All right, Rick, let's pull up that Palantir chart and take us through the trends that you're seeing.
Yes, a pretty big decline off of those all-time highs we saw only a couple weeks ago. We're down like 33% or so from there as of yesterday's close. But if you look at the chart, so far we've managed to stay above or around at least a pretty important area. This set of double top type highs near 84, 84.25. We had our big gap up on earnings recently around February 3rd. And now look here, even though we've declined and filled the gap, for the most part, price has managed to close at least around that level, which also happens to be the site of our orange 63-day exponential moving average. So a key level to watch as we move in and start today's trading day, Diane.
Okay, that's a key level to watch. I know we usually go into the recent options activity that you are monitoring. We're short on time, so I want to get right to the example trade. We've got Tom White, co-host of Fast Market and senior options contributor, here to set us up with an example trade as it relates to Palantir. How do you go about this, given the action that the price action that we've seen recently? It's got a little bit of momentum in the pre-market here off the back of this upgrade. How would you structure an example trade, Tom?
Well, I think you have to take a look at that pullback. We're now in bear market territory, as Rick mentioned, down over 30% from those all-time highs of about $125 a share. Probably a good time for that upgrade. So I looked at a strategy that's a little bit of longer duration, so it gives us some time for the stock to recover potentially on this. The 50-day moving average about 86.5 right now, so we need to get above that level for this trade to work out. But if you think it's going to rebound over the next month and a half, this strategy takes advantage of that. Looked at a bullish call diagonal here where I went out to the April 17th monthly options that expire in 43 days, and I bought that slightly in the money 85 strike call. That's the bullish segment of this strategy. And then against it, to offset some of the risks and to lower the price point that you paid for this call diagonal, sell the March 21st monthly options that expire in 16 days, sell the 95 strike call. So a bullish $10 wide call diagonal that's got a month between the two option series here. You're going to pay roughly for a $10 wide call diagonal, $7 debit, right? So there's your risk, $700 per spread, and it's lower than the width of the call diagonal. So that's the positive part of that. Your break even to the upside, it's going to be about $88. So anything above 88 is going to be potential profitability on this trade. And the key with this type of strategy is I'm buying a lower implied volatility than I'm selling. I'm buying about 78, 79% implied volatility in aggregate in that April 85 strike call that I bought, and selling about an 88% implied volatility on the March 21st weekly 95 strike call. That lowers the input price or the risk on this trade. Now, you're going to have 4 opportunities to roll or adjust this trade. Also, that creates credits, lowers the risks, increases potential profitability on this trade, and you've got 4 opportunities to roll that short 95 strike call as you get closer to expiration. Those rolls can expand to anywhere from $2 to $3 each, so that increases that potential profitability. But if you think the stock's going to start to grind higher, get back towards those 95 levels, maybe even 100. This type of strategy takes advantage of playing that implied volatility dispersion, which lowers the entry point of this strategy.
All right, that's an example trade for Palantir, which has faced some weakness recently, trading a little bit higher in the pre-market off the back of this upgrade. It still has some momentum this year to date, even despite some of the weakness that we saw recently. Tom, thanks a ton for that example trade on Palantir.